Hey guys, what's going on today? This is Jerry here at DynamX coming to you with a really quick live video, and I want to talk to you guys today about taxes. So if you're tuning in, we just did a course on Saturday. We covered taxes going forward to 2019, end of 2019 into 2020. What do you need to know about taxes? Now the reason why I'm talking about taxes is because by reducing your taxes, you're actually able to save and invest more money. That's right, you're able to save and invest more money. Now, here's a couple things you need to know about taxes. So, first things first, and this is called Blackboard talk. I don't have my Blackboard today. We are going on a whiteboard. That's totally fine. When you're doing your taxes, if you are self-employed or an employee, we're going to call that EE, this equals less deductions. Okay, so I want you to realize when you hear some of these tax strategies, you need to realize what applies to you. So if you're an employee, you have the least deductions. Okay, you have the least opportunity for deduction. So if you're looking at deducting stuff, it's very hard for you to justify that because you don't have a business. You don't have anything to claim you're spending extra money on for business purposes. You work for somebody. Now, if you're self-employed, you've got a lot more deduction opportunity, but you've also got a higher tax liability because you pay all of your own self-employment taxes. That's an additional 15% on top of your income, right? Now that that's on the board, we know that's on the table. We need to be considering that. What you really need to think about is if you are qualified to start taking tax deductions, you need to understand your target, okay? So your target is this. If you're a single filer, your target is you need to be able to write off more than $12,400 in a given tax year. This is for 2020. This is called your standard deduction. What this means is that the IRS is going to give you $12,400 of free deductions. You get them no matter what. Every single filer does. And what that also means is that if you're trying to write stuff off and you don't write off more than $12,400, none of that stuff matters. It's a threshold you actually have to break before any of your itemized write-offs count. So if you're writing off, let's say you decide you're going to write off your apartment and that's going to give you a few $1,000s, and you're going to write off your car lease and that's $300 a month, that's only $5,000. So if you leased a car just to get the write-off and you're only writing off $5,000, it's not going to count because you already get 12. You see what I'm saying? If you're a family, that number is going to be $24,800. That's your target. So if you're writing off as a family, you need to basically be able to write off a little over $2,000 per month. It's going to be $2,083 per month approximately, right? Or less than that, I think it's $2,033 per month approximately, that you're going to write off and spend in order to get past your standard deduction. Because again, this is free money that you already get. So if you're not considering, all right, I'm already getting $24,800. If I'm trying to get deductions, it means I have to spend more than $24,800 and write that off as well. Then you really can jack things up. I see a lot of people that don't realize that. They go lease a car. They start doing all this extra stuff, extra things to try and get tax benefits, and they don't realize that they're not getting any benefit unless they get past those numbers. And it kind of ruins things for them when they find out that, hey, none of this counted up to my standard. Therefore, the itemized really didn't make sense for me and I spent a lot of this money for no reason. So understand, again, number one, are you an employee? Or if you're an employee, I really want to encourage you, get a side hustle, get into a multi-level marketing company, network marketing, a side business, something of that nature so that you're able to get those deductions. If you naturally are self-employed, realize that you have those, you do need to document them and keep track of them. So guys, before I tune out today, if this was helpful for you and you want to get more information like this, I want to have you reach out. There's a link that I'm going to throw down in the comments here at the end of the video. It's jerryfetta.com/taxes. Also, if one of you guys wants to throw that down in the comments really quick, that would be great. jerryfetta.com/taxes. If you would like to jump on a call with our team and learn how we can help you lower your taxes by 20 to 30% by the end of 2019, that's what that link is for. We've partnered up with my CPA firm that I personally do my own taxes with. We want to offer that to you guys as well as we're wrapping the year up. I'm going to be making some big moves on my own taxes. I hope the same for you. So thank you guys so much for watching. Make sure you like, share, and subscribe. I'm going to talk to y'all soon.